You've paid your rent on time, your income steady, and every bill is spotless. But when you apply for a new apartment, the landlord quietly says no. A number you didn't create just decided your future. It's called a credit score, and it runs your financial life whether you know it or not. It shapes everything: your car insurance, your job offers, your relationship with money. Here's the uncomfortable truth. Credit scores weren't designed to care about you. They were built to protect lenders. Over time, their trust metric became society's measure of personal worth. Today, almost every American adult has a credit score, but over 40 million people have a thin file. The system can't read them. That means it doesn't trust them, even if they've done nothing wrong. And when the system doesn't trust you, it quietly makes you pay for it. You pay higher interest rates without knowing why. You lose leverage when you try to negotiate for better terms. You get charged for being invisible. Let's pull the curtain back and see the machinery behind this. Because this story isn't really about responsibility. It's about control. The year is 1989, a time of falling walls and rising algorithms. Living rooms are filled with video games, and credit math is coming alive in the background. A company named Fair Isaac, or FICO, launches a quiet revolution in money. Before FICO, lending was personal and biased. Intuition, hunches, and prejudice. After FICO, everything revolved around a cold number. A 3-digit code from 300 to 850 now determines your financial destiny. That number starts deciding who can buy homes, open businesses, or even get a phone plan. It felt fast and efficient, but stripped of all humanity. Clean data replaced conversation. And suddenly, even Congress couldn't fully explain how it worked, because no one outside the company was meant to understand it. The hidden math of credit rewards the exact thing it claims to warn against: debt. If you never borrow, the system sees emptiness, not safety. It needs to see you owe money to trust you with more money. The formula is split into invisible categories: payments, balances, time, applications, and mix. Your history of paying bills on time matters most. The size of your balances against your limits shapes your score next. The longer your history, the better your grade. Asking for new credit too often can drag it down. Having the right mix: cards, loans, mortgages, completes the illusion of stability. But the system ignores real responsibility. Rent, phone bills, utilities, those daily bills most people actually pay, they usually don't count. And if a company wants them counted, it must pay the bureaus to report them. Meet the 3 private gatekeepers of nearly every American's financial identity. Their data pipes connect the entire economy, quietly running in the background. They decide what counts as reliable and what disappears. They profit each time someone checks your credit. When they make a mistake, it's your job to prove you're right. In 2017, one of them spilled the private data of half the country. ID numbers, birthdays, addresses, all exposed. They paid a fine smaller than their quarterly profit. The people affected spent years cleaning up the damage. Yet, we still pay them to tell lenders if we're trustworthy. The system that claims to measure responsibility isn't responsible for itself. That 3-digit score doesn't just govern loans anymore. It quietly shapes your insurance premiums too. Landlords use it to judge renters they've never met. Even some employers run it before hiring. A bad score can deny you more than credit. It can deny you stability. So when people say credit scores don't matter, they mean until you need something big. You can't opt out of this metric. It's stitched into the system. Even if you've sworn off borrowing, your past still defines your financial identity. Then the apps arrived, promising to gamify your credit health. They turned your score into a product, a number to chase and share. Bright dashboards showed progress, points, and fake empowerment. But behind the scenes, those apps sold your data back to lenders. You became the raw material, not the customer. It's the perfect illusion-free tools designed to keep you feeding the machine. The system trains you to maintain debt just right, never too high, never too low. A treadmill where the goal is motion, never freedom. Zoom out, and you see the architecture of global trust built on this logic. What used to be human judgment has turned into monetized data. Trust itself has been automated, and your worth is scored like a transaction. Somewhere along the way, empathy got replaced by an algorithm. Imagine every relationship tracked, rated, and ranked like a financial account. Every handshake becomes a data point in a giant invisible spreadsheet that used to sound dystopian until it became everyday reality. For money, that dystopia has quietly existed for decades. The credit system began as a tool to make lending fairer, and sometimes it did level the field. But it also built invisible cages around millions, limiting mobility through math. Low scores lead to high debt costs. High costs sink people deeper into loans. Debt lowers scores further. That's the loop. Simple, powerful, inescapable. It keeps wealth flowing upward and risk trapped at the bottom. A silent algorithm decides who moves ahead and who stays behind. No mystery, just math and incentives perfectly aligned. Some call all of this progress, others call it necessary. But maybe it's proof we now value credit worthiness more than character.